As for the chart of MP Materials, it's so hard to read, it's a bit of a mess, and I wouldn't even waste your time looking at technical analysis because it's just too fresh to the market. It's dipped below a support line which now could become resistance, so it could go lower, but you just can't tell. It might just suddenly shoot up, so it's best to just step back and just think about why you bought the stock in the first place and the company prospects going forward. Technically, the only real solid support is all the way down here at 1536. And we don't want to drop down that much. That's a 50% drop from here. But don't forget, this isn't localized to MP Materials. This is SPACs in general are pulling back. So I think what we need to see is the SPAC market picking up again in general. Now, part of this sell-off has attracted the short sellers. There's been an increase in the short interest in the month of March. Short interest increased a whopping 81.3%. The short percent of the float is now 13.6%. And short interest as a percentage of the float above 10% is fairly high, and short interest as a percentage above 20% is extremely high. And we need to be aware of the risks. In one of my earlier videos, I also said how it feels a bit strange that MP Materials is part owned by a Chinese company. That company is called Shenghe Resources Holding. They own 8% stake in MP Materials, but they are a partially state-owned enterprise of the government of China. But more of an issue for me is the fact that that same company that part owns is also the biggest buyer of the concentrate. What happens is MP Materials digs the rare earth out of the ground. They can't process it because they currently don't have processing facilities, so they send it to China to process, and the company that processes it in China is Shenghe Resources. So they've got a kind of catch-22. They're on both sides of the trade. And what happens if China and America's relationships break down? I mean, in the last trade war back in 2019, China doubled import duties on rare earth concentrates. Just like that, they just doubled the price. So MP Materials has to get to the stage, really, where they're processing their own concentrate. They need that if they want, the whole supply chain to be in-house. And I didn't know this, but back in 2020, the Department of Energy told government scientists, US government scientists, not to collaborate with MP Materials because of its China ties. However, cooler heads obviously prevailed at that time, and they decided to go ahead and resume funding for MP Materials. On one hand, I can see why having Shenghe Resources as part ownership of the company is a good thing, because if they're the ones processing, you've just got a guaranteed buyer. But it's obviously safer to have their own supply chain in-house. And this leads us up to their need to complete stage 2 and become self-reliant. In an article here on Investor Intel, it says, as reported in MP Materials Q3 2020 8K form, the completion of our Stage 2 optimization plan and any development of Stage 3 is expected to be capital intensive. We expect to invest approximately 170 million to complete our Stage 2 optimization plan. But what happens if Shenghe Resources stops buying the concentrate? How will MP Materials then be able to afford Phase 2, seeing as Shenghe Resources are their only or major buyer? I'm not saying this is a likely event at all, it's just something that is on my mind. The overwhelming good news is the support of the government now. There's an Economist article here saying that governments have identified commodities essential to economic and military security. And they make the point that America's support of Mountain Pass points to a broader phenomenon. The trade war with China and COVID-19's disruptions to supply chains have stoked fears of dependence on foreign production of medicine, semiconductors and more. So I don't think this government support is now going to go away. MP Materials has a ZAX rank of 2, which is very good, and the analysts have been pretty favourable recently. MP Materials has received a consensus rating of buy. The company's average rating score is 2.6. This is based on 3 buy ratings, 2 hold ratings and no sell ratings. And on Yahoo it comments that MP Materials is actually looking pretty good on its own. The firm has seen solid earnings estimate revision activity over the past 2 months, suggesting that analysts are becoming a bit more bullish on the firm's prospects in both the short and long term. So where does that leave us? It's not for me to try and guess if the price is going to go up or down, because who knows, but I think to bear in mind that the SPAC sector in general has been pulling back, and MP Materials is just one of those. MP Materials has been clumped in with the EV sector as well, so it may just be slightly scary to see the stock price come down, but That's not to say there's anything fundamentally wrong with the company. So it's a tricky one, isn't it? On the one hand, MP Materials is a very costly business. There's a lot of unknowns and uncertainties and risks. And on the other hand, they're supplying about 15% of the world's rare earth in a booming industry, which includes electrification in many sectors. The analysts have upgraded it to a buy, and they obviously know more than I do, so that's one good thing. That's all I have for now. Thanks for watching, and I'll see you in the next one.